Property owners in Maryland could lose part of their mortgage interest and property tax deduction under the governor's budget proposal for the upcoming fiscal year.
The measure has many homeowners and realtors concerned. Joining us now to talk about the issue is Elise Bowles, president of the Prince George's County Association of Realtors. Ms. Bowles, thank you so much for joining us.
You're welcome. Thank you for having me.
We want to start off by asking, why are real estate trade organizations up in arms about this proposed tax benefit reduction?
Primarily because we are the only voice that the homeowners have in home ownership, and we are fighting for their rights to continue to have the mortgage tax deduction that historically has been a part of home ownership in Maryland for quite some time.
Is it fair to say that Maryland homeowners at this point in time are paying their fair share in order to support state and local services, or are they not?
We feel that Maryland homeowners and Prince George's County residents in particular are at least paying their fair share. We have the highest tax structure in the state of Maryland, and Maryland itself is high. So we feel that, yes, they're paying their fair share.
And I understand that the tax code has not changed since 1913. Some say it's time for a change. How do you feel about that?
Well, whether that's right or whether it's wrong, since that it hasn't changed since 1913, historically that has been a good policy for Maryland and for the residents of Maryland and Prince George's County as well. And we would not want them to lose that interest deduction, which technically would translate to a tax increase. And it's a good policy. It works for Maryland residents, and it's good for the economy. It's good for the homeowners.
I know that the people who are proposing this idea don't like the idea of it being called a tax increase, because in reality it's a benefit reduction. But when people see their bills, they're going to see a higher price if we're doing this. How much can we estimate what it's going to affect, how it would affect homeowners?
Do you mean in
numbers? For example, next year, homeowners may not know what's going on until a year from now, and suddenly, or 3 years when they get their new assessments. What kind of effect would it actually have on them?
Well, I don't have those numbers with me, but it would definitely be a negative impact on home ownership and the economy in Prince George's County in Maryland. Definitely, we feel that would be the case. However, we do have information for homeowners, and they don't have to wait until next year to find out what they need to know. We have a website that's designed for them to go to, and they can reach their legislators and find out what they need to know. And that website is www.mdmid.org. So please go there, and we urge residents to go there and contact their legislative representatives to voice their opinion.
And Ms. Bowles, before we go, you touched on this a few moments ago, but can you clarify where we rank nationally in terms of dependency on real estate taxes?
As far as real estate taxes, deductions on their tax returns, I believe, and I'm not sure, I'll have to check these numbers for you, but I think Maryland is about 62% of all residents deduct mortgage insurance deductions on their taxes. And we need to continue with anything that's going to help our area survive through the struggling economic downturn that we've had. So we urge the governor and our legislative representatives to please not go forward with this deduction, and we ask our local representatives to fight this on behalf of the Maryland homeowners.
So ultimately it could affect about 2/3 of the homeowners from what you're saying?
Perhaps.
All right, thank you.
All right, Ms. Bowles, well, thank you. Very significant and timely information. Thank you.